Good morning, everybody, and good afternoon for some of our attendees and colleagues that are joining from outside of Europe. Today we are running this webinar with ARQ Educates and in cooperation with Eastnets on real-time transaction monitoring in Malta. The trigger for this discussion is off the back of the recent FIAU guidance notes titled "A Look Through the Obligations of Transaction Monitoring," which was issued a couple of months ago now, back in April. We thought it was a good opportunity to get together with some panelists, some experts, not just from the regulatory teams, but also from the industry as well. So we'd like to spend the next hour getting into some of the details of the guidance note and focusing on what does it mean for the financial services industry in Malta, for banks, for payment institutions and the like, and how do they embrace the guidance and take it forward in terms of ensuring they can put into place some of the practices and best practices suggested in the guidance note. If I just remind everyone about some of the, as an introduction, some of the content of the guidance notes. Subject persons have obligations under the Prevention of Money Laundering and Funding of Terrorism regulations to carry out ongoing monitoring of transactions, clearly. And one of the main aspects of that is being able to scrutinize unusual and suspicious transactions, but also pre-transaction or on a real-time transaction monitoring basis. And this, I think, has been one of the real sort of tricky areas for banks and financial institutions to really implement and make sure that their technology is aligned and talking to other systems that they have across their institutions. So what we'll do in the next few minutes is we'll delve into some of the key topics that the guidance note has highlighted, pick out some of the goals that I think the FIAU have clearly put into the guidance note, and evolve some of these discussions with some real examples as to what's working well and where perhaps some of the areas for improvement still lie, particularly off the back of the inspections and findings that the FIAU have highlighted in some of their recent reports. So let's do a quick introduction to the panelists we have here today. Firstly, let me introduce Jeremy, Mercieca, Abela from the FIAU. Thank you, Jeremy, for joining us. For those of you who don't know Jeremy, he's an associate with the FIAU Enforcement Selection Team. One of his key roles there has been preparing and presenting cases for the FIAU's Compliance Monitoring Committee. And he was also very deeply involved in the construction of the guidance note. So hopefully he can give some very good insights as to where some of the suggestions have come from and the background to them as well. Prior to joining the FIAU, Jeremy has worked for 2 years in internal audits and AML compliance in one of the Big Four consulting firms, and we look forward very much to Jeremy's insights today in this session. We also have Manfred Galdes, part of ARQ Group, who's the managing partner here at ARQ. Manfred's got over 20 years experience practicing the area of AML compliance. Previously he's also worked for the FIAU as well, and leads the multidisciplinary team here at ARQ Group that advises banks, domestic and international banks, financial institutions, as well as gaming clients on AML compliance matters, as well as transaction monitoring and the details of some of the guidance notes. We're delighted to have Rasha, Abdel, Jalil from Eastnets joining us as well. Rasha is part of the product development team at Eastnets, so is very familiar with some of the technology requirements that banks and payment institutions are implementing and continue to evolve to meet transaction monitoring requirements. Rasha has graduated with a degree in computer information systems from the University of Jordan, and also has spent many years working in financial crime prevention and international compliance, both across Europe but also the Middle East as well. So thank you very much, Rasha, for joining us as well. And we will also be joined by Cynthia, Cynthia Borg, who's from APS Bank. She's hopefully going to appear on screen in the next few minutes, but it's just getting some connectivity issues resolved. So for those of you not familiar with Cynthia, Cynthia's got over 30 years experience in the banking industry here locally in Malta, across a wide range of banks here locally. Since 2019, Cynthia has held the position of the Head of Financial Crime Compliance at APS Bank and is responsible for developing and implementing financial crime compliance systems and frameworks. So we look forward to her insights as well from the industry. So if we kick off, first of all, I'd like to maybe bring Jeremy into the discussion as our first participant of the panel discussion. And really, if I can ask Jeremy to provide a bit more context as to the recent guidance note on transaction monitoring and what has triggered this guidance note to be issued and where you feel the main priorities are for banks and financial institutions to take into account.
Okay, great, thanks. First of all, good morning or good afternoon, everyone. I'm delighted to be here and thanks for the invitation. So to provide a bit of background about the issuance of this guidance note, I mean, transaction monitoring has always been a top priority for the FIAU. And one of the main reasons which led to the trigger of this the paper was the fact that over the past years, especially the past 3-4 years, there's been a significant increase in the number of transaction monitoring related breaches noted during compliance examinations. And this in turn has also led to a significant amount of administrative penalties being issued in relation to this breach. Just to provide a bit of statistics out there, during the years 2020 to 2022, there were 5.8 million in administrative penalties issued in relation to ongoing monitoring or transaction monitoring breaches, and a staggering 4.6 were in relation to credit and financial institutions. So it was a significant percentage of the total number of administrative penalties issued for ongoing monitoring or transaction monitoring breaches. And it's sort of on this basis that the FIAU felt that it should intervene by issuing this guidance paper. We've also been receiving a lot of feedback from industry and requesting further guidance on the matter. And we felt that certain areas, particularly as you've mentioned before, pre-transaction monitoring required a bit more guidance, and to sort of assist subject persons' understanding on this matter, we even tried to make the paper as friendly as possible, include a lot of case studies, a lot of practical examples to make it relatable. And in relation to pre-transaction monitoring specifically, although it's mentioned in the implementing procedures, we felt that a bit more sort of formal guidance was needed. So that's the reason why we include this in such great detail in the paper. Now, when it comes to transaction monitoring, the FIAU believes that a mix of both pre and post-transaction monitoring is required for transactions to be scrutinized effectively. Now, when it comes to pre-transaction monitoring specifically, obviously, as most other regulators worldwide also agree, the FIAU does not expect subject persons to review all their transactions in real time, but to focus on those transactions which are perhaps a bit more unusual or suspicious, which are higher risk or in relation to higher risk customers. So again, we don't, obviously, even from an operational point of view, it's impossible to review each and every transaction, but for those ones which are a bit of more likely to be of a concern, we expect that these are scrutinized and reviewed in a timely manner. And to prevent these transactions from occurring in the first place, recommend that certain level of pre-transaction monitoring scrutiny is carried out. So that's sort of a bit of background about the paper and what the FIAU expects in terms of transaction monitoring.
Thank you, Jeremy. And perhaps if I can just evolve the point you made a few moments ago around some of the observations that have been picked up during inspections and the like. Maybe if we look at any best practices you've seen or observed, as well as perhaps highlighting where you see the greatest room for improvement is. So both the sort of the positives and the negatives when it comes to this topic. Could you share any insights on that basis?
Yeah, sure. So I think generally speaking, just to start off with this, we've seen, and the FIAU has seen a great level of improvement being made in transaction monitoring, especially when it comes to credit and financial institutions. So sort of we commend this, and it's great seeing that subject persons are trying their best to try and fulfill their obligations in relation to transaction monitoring as best as possible. But obviously there's always some room for improvement, and I think one of the main areas as well is in relation to pre-transaction monitoring. I think this is still something which is evolving, especially in the local scenario here in Malta, and it's only, I think, in the recent years that subject persons are trying to make this push to try and incorporate elements of real-time monitoring into their systems. For example, something which we've noted during the compliance examinations conducted was the fact that sometimes subject persons limit pre-transaction monitoring to only list screening. So they only screen their customers against, for example, sanctions lists, PEP lists, and so on. But obviously, this is only a very small part of what should be done at the pre-transaction monitoring stage. As I mentioned before, the focus should also be on those transactions which present a higher level of risk or are in relation to high-risk customers. For example, those transactions which immediately appear to be evidently outside of the customer's business and risk profile. So, or those transactions which are abnormally large, but doesn't mean, first of all, on this point, it's not just because a transaction is large, but a transaction is large within the customer's profile, because there are the various subject persons which process huge volumes of transactions every day. So a large transaction for them would obviously be different than a large transaction for a smaller subject person. But obviously, everything has to be seen within the context of the subject person's business and sort of the customer base and the products they offer as well. Another thing we've noted when it comes to transaction monitoring specifically is in relation to the detection rules applied. Sometimes these were either too wide, so they didn't really capture the right types of transactions, or they were based on a one-size-fits-all approach. So this is when subject person, for example, buys an off-the-shelf solution and doesn't tailor the detection rules to ensure that it is relevant to their type of business. So it's another area which we've noted. And another one also is in relation to supporting documentation, because sometimes the subject person's systems are able to capture the right types of transactions, but then they either don't follow up with collecting the right type of documentation, or they collect documentation, but then this isn't adequately reviewed. I think that's also another issue, because sometimes it's not about just collecting the documentation, but also making sure that this makes sense and is able to substantiate transactions in question. Another thing also which we've noted is in relation to MLFT typologies. I think there were certain types of subject persons, again, this sort of ties in with the one-size-fits-all approach as well, where they weren't really considering specific typologies in relation to the products they were offering, but they were applying their rules more generically without even taking into consideration, for example, their types of customers, whether they were personal or corporate, the industries within which they operated, and even the geography sometimes wasn't really taken into consideration. And I think one final point was that there were also some pre-transaction monitoring taking place, which wasn't really relevant to the sort of transactions that were passing. So it was only looking at certain aspects of the transactions, but then ignoring, for example, the transaction type or the transaction amount or the involved parties. I think when it comes to pre-transaction monitoring specifically, it needs to take into consideration a lot of factors, not just the basic ones. And for post-transaction monitoring, then there are various ways in which this can be conducted. For example, it can either rely on applying certain detection rules, as is also the case for pre-transaction monitoring. But you can also, for example, issue certain pre-transaction monitoring reports. And sometimes what we've noted is that these reports, which should contain analysis of transactions either pertaining to a type of transaction or to a type of customer, these reports either weren't being issued on a regular basis or were not really properly analyzing, certain more serious types of transactions or more suspicious types of transactions. So there's also sort of some improvement that could be done from a post-transaction monitoring point of view. I think, generally speaking, that's a summary of transaction monitoring related observations and shortcomings, and also sort of some areas for improvement as well.
Thank you, Jeremy. That's very helpful, and I think that's a great list. We can delve into some detail here in this discussion. If I introduce Manfred really to just get some reaction from the industry, then I think Manfred, as a sort of trusted advisor to many of the banks and financial institutions that have been digesting this guidance note, before we jump into some of the specifics, how has the reaction been, and where are the pain points being felt?
Thank you, Alex. I think I'm going to be the only one representing the industry here, because Cynthia seems to have some serious connectivity problems, and she still hasn't managed to connect, and it seems like the difficulties are becoming a bit insurmountable. At least that's what I've just been informed, because of, I presume, blocks from her end and from the side of the back. So hopefully she'll manage to join towards the end and she can contribute. But in the meantime, I'll also give the angle of the banks that I work with, that we work with as ARQ. I'm looking at it even from other sectors and not just banks and financial institutions. I know there are a number of people in the audience from the gaming sector. Well, I think there's always positivity. There's always a good reaction to guidance. So in an area where we've had requirements, we've had legal obligations that have been in place for several years, and there was always a lot of grey. There has always been a lot of grey areas as to what needs to be done. Finally, we're seeing some more clarity, and some more clarity in the form of a document issued by the FIAU. So what we've had is generic rules in the prevention of money laundering and funding of terrorism regulations and in the implementing procedures, which are now being backed by a guidance note that goes into more details as to what needs to be done in practice. So there's definitely a very positive development, and in that respect, it has been very well received. In today's focus, today's webinar, we're looking at the pre-transaction monitoring aspect, which is possibly the greyest of areas, because the rules so far, as Jeremy rightly pointed out, have told us, you have different types of monitoring that can be carried out: peer review, post-transaction monitoring, etc. And pre-transaction monitoring is one of them. And it is at your discretion as an obliged entity, as a subject person, as a bank, financial institution, gaming company, whatever you are, to exercise that discretion and carry out pre-transaction monitoring insofar as this becomes necessary, depending on the size of your organization, depending on the type of customers you have, depending on how you interact with customers. So this remained extremely, extremely vague over the years. With this guidance note, we're getting to see a little bit more what the expectations of the regulator are. At the same time, I think there has been a bit of a negative reaction, in the sense that there still is uncertainty. So in a risk-based approach scenario, it becomes very difficult for the regulator to tell you exactly what you are meant to do, and that is not the spirit of the risk-based approach. So you can't have norms that are going to apply to everyone, but there still is uncertainty, I would say, not as to the extent to which the rules need to be applied. I think that the main areas of uncertainty are more within the context as to what is best practice and what is legally binding. So we've had, as I said, the rules remain generic. So the implementing procedures still speak about, you should consider carrying out pre-transaction monitoring. Yes, it is more prescriptive when it comes to higher risk situations, but which entities and in what circumstances and how and when transaction monitoring needs to be applied before the execution of a transaction remains slightly vague in terms as to what is the legal requirement. So the guidance tells us what best practice is and what systems can be applied and should be applied in certain situations, but the extent to which an entity could be falling outside of its legal obligations, going contrary to its legal obligations, might not yet be that clear. So the FIAU has imposed penalties for transaction monitoring, as Jeremy has mentioned, and from the publication of the findings of the FIAU when those penalties were imposed, we've learned a lot as to what the expectations of the FIAU are, but how deeply embedded those requirements are in the law remains slightly vague, and therefore possibly what is in the guidance note should be reflected eventually in the implementing procedures where the FIAU considers things to be mandatory requirements, because what we have is a situation that possibly norms are emerging from the guidance notes rather than from the law or the implementing procedures themselves. So that I think is one area where I think which merits some further discussion possibly.
Thank you, Manfred. Thanks. And I think if we get into a bit more detail on some of the specifics, then, so as Jeremy highlighted, there's I think a number of areas that there is room for further improvements on, and the specifics I think are still being debated in the industry. But maybe if we get into the sort of pre-transaction monitoring, and that the guidance of having, I think as the guidance highlights, having systems that can be configured to take into account multiple detection rules and scenarios, that perfect world where you've got customer profiling, customer risk rating systems and transaction monitoring systems all talking efficiently to each other and well configured. From your discussions and awareness in the industry, Manfred, how tricky is that, and how well advanced are we in this area at this point in time?
Okay, so as I just said, so ultimately the norms and the expectations of the are emerging slowly. So as I said, first you had the cases, and therefore the FIAU was setting out what it expects in the decisions that it took vis-a-vis a number of banks, financial institutions, gaming companies, from a transaction monitoring point of view, with some effects, companies, etc. And now these norms are finding their place in the guidance notes, such as what you're mentioning, the link between the monitoring system and the customer due diligence and the customer profile, and the ability of the entity to be able to establish that link and therefore raise alerts when the transaction is not in line with the profile of the customer. Now, as we know, banks, financial institutions, other types of obliged entities all have legacy systems, so legacy issues and different systems that might not necessarily speak to each other. So the interlinkage between the information that they have on the customer and the monitoring system is not always easy to achieve, especially in the short time frame that we're talking about. So whereas there has been over several years an awareness as to the need to identify suspicious transactions, unusual transactions, transactions that could be indicative of money laundering, that link between the due diligence and the customer risk profile has been embedded in the implementing procedures in terms of a general requirement, but not necessarily the detail that would be would be required when discussing, these matters at this level. So what is happening is that it is taking quite a bit of time to be able to embed systems within the financial institutions that have larger databases, more volume, more transactions, and whose systems were set up years ago and therefore are not necessarily geared up for these newer norms. And even the data collected over the years would not necessarily be the data that needs to be examined and reviewed for the purpose of identifying this discord between the profile and the type of transaction. So I would say that is one of the major issues. Also, in terms of emerging norms, if we read through the guidance note, there is, under a part that deals with best practices, a requirement, what seems to be a requirement, even looking at the language, and it's a requirement in the guidance note that I don't believe, at least I stand to be corrected on this, I don't believe is in the implementing procedures per se, that says that there needs to be a single customer view. There needs to be an aggregation, an aggregated view of the customer's activity. So if my customer, let's take the example of a bank or a financial institution. So my customer has an account in his own name, an account of a company where he's a shareholder, an account with his wife, an account of a group of companies where he's director, or maybe more than one account. The ability of the bank to link all of those accounts for the monitoring purposes is not straightforward at all. But the guidance note seems to presume that these systems are in place, because the guidance note actually says that the subject person must examine transactions in an aggregated way, so the transactions of a customer. So if you look at the gaming industry, the single customer view has emerged over the years. There's been consultation in the UK. There's an extensive consultation at the moment, and that has led and is leading in certain jurisdictions, to a legal requirement with detail as to the technology that needs to be adopted. If my reading of the guidance note is correct, it seems that this requirement now is being taken for granted. That all subject persons do have the ability to look at a customer in this way. When I am uncertain whether this is really the case. Now, those are two examples. I can give more, but I think that's enough for now.
Thanks, Manfred. And maybe if I just bring Jeremy in just for a quick comment on that last point, if you'd like, on Manfred's last point, and then we'll talk about some of the technology a little bit further.
Yeah, sure. So in relation to your last point, Manfred, regarding the aggregated view, we understand that obviously there are subject persons who haven't arrived at this stage yet, and subject persons which are currently in the process of arriving there, smaller subject persons that perhaps don't have the resource or technology. So we understand it's a gradual process, and it's something which will definitely need a bit of time. But then at the end of the day, having this aggregated view is essential, because it's based on that we believe that subject persons can effectively scrutinize transactions, because sometimes looking at a transaction or a group of transactions in isolation doesn't really provide the full picture. Even if, for example, there's a customer who makes use of 2 or 3 different services. For example, from a credit institution, he has a loan account, but also a savings account. Sometimes looking at the bigger picture and taking into consideration his activity in relation to both services will help provide a better understanding of the rationale behind certain transactions that are taking place. Now, obviously, this, as you mentioned before, it's not something which can be easily integrated. It needs some time. It needs the required technology. So, it's something that we also take into consideration, even when, for example, conducting compliance examination. But at the same time, that's sort of where we want to arrive at, that there's the subject persons are able to look at their customer's profile and activity in a holistic manner, taking into consideration their activity across different products and services. And if I can also comment briefly on what you've mentioned before about perhaps the extent of transaction monitoring, especially pre-transaction monitoring. I think in order for subject persons to effectively carry out pre-transaction monitoring, they also have to take into consideration customer segmentation. I think it all builds on that, because if the customer's portfolio is segmented in a way which facilitates then the implementation of detection rules, it will be more easy to then build detection rules which identify the right types of transactions. I think it all builds on that. It's important, for example, to segment a customer portfolio into personal and corporate customers, and then for personal customers, take into consideration, for example, whether they're employed, unemployed, self-employed, and then for corporate customers, their size, the industry, the transaction volume. So in reality, there isn't sort of one approach which can work, because every subject person has a different customer base, offers different products and services. So it's on the basis of this customer segmentation that then proper and robust detection rules can be built. And then the transactions that will be identified will depend on the rules that are built and then fine-tuned on a regular basis. I think it's sort of difficult, even from an FIAU's point of view, to mandate to prescribe on how, for example, this particular situations, the exact situations or the exact rules that can be implemented. But it really depends on the subject person on a case-by-case basis. I think that's sort of what we're trying to push a bit in the paper as well, that everything has to be tweaked and tailored according to your customer base. And there isn't really one approach which works, because ultimately, as you said, we want it to be risk-based, and a risk for a particular subject person may not be a risk for another subject person. I think that's a very important point as well. So that's a bit of our rationale behind sort of perhaps not going into exact detail on the exact scenarios that we want, for example, pre-transaction monitoring to be applied. But we provide a list of some scenarios which we believe constitute a higher level of risk, but then it's up to subject person to identify those higher risk factors which then necessitate pre-transaction monitoring. And again, and another point I'd like to mention as well in relation to pre-transaction monitoring specifically is that this is not something just that the FIAU is coming up with, but it's actually something which emanates from the European Banking Authority's risk factor guidelines, as well as the funds transfer regulation. Both these pieces of regulation make reference to the importance of having real-time transaction monitoring taking place. So it's also something which the FIAU considered when we issued this guidance paper, that we're not sort of acting alone. It's not something specific to the FIAU, but it's something as well emanating from European and foreign regulation as well.
Thank you, Jeremy. And I think the point you make there on segmentation is a very helpful guidance. I think, as you said, the guidance note is good at providing, I think, some of the ingredients for how to start segmenting customer portfolios for subject persons, and I think your point on how the subject persons decide to create their own recipe for segmentation is very much specific to that institution. The other point that's come up quite clearly then in this discussion is the usage of technology, and it's great we've got a representative here of one of the major technology providers, I think, for the AML screening world. So if I can maybe bring sort of Rasha in to reflect on some of the points that we've already covered, but could you maybe start to introduce where you're seeing it at Eastnets, the role of technology becoming more and more important for this area, particularly transaction monitoring and pre-transaction monitoring?
Thank you, Alex, for the introduction and for the invitation as well. Good morning, good afternoon to everyone. And I want to welcome all the attendees who are joining us today in this webinar. Actually, from what was mentioned already by the panelists from the FIU and from the consultation company, the main challenges from the financial institutions are around having one centralized data repository, capturing accurate information about the customer's declaration, information, the controlling persons, the shareholders, in addition to the strict and the changing regulations from the regulator. And Jeremy also highlighted one important point is related to the segmentation of the customers, because this will lead to the main challenge in the financial institution, which is the high level of false positives. And here comes the technology, the role of the technology to help the financial institutions to overcome these challenges by offering various integration points via the APIs with data source providers who can provide them with reliable data about shareholders, controlling persons, and then this can be presented using advanced link analysis, visualization tools to show the organizational hierarchy, direct and indirect shares, and even hidden and suspicious relationships and connections that wouldn't be possible to be discovered using the tabular normal format of the information. Also, having an automated transaction monitoring system, it can function as a data aggregator, and this was highlighted clearly by Manfred, that usually the investigators, they might need to log into different systems, KYC, CRM, card system, etc. So it is challenging for them. So with the technology, we can provide them with a centralized data repository, having all data in one place, and this will help them to streamline the investigations, increase the efficiency, instead of digging into a pile of Excel sheets. And this will play a great and a rich environment for the AI models and the big data analytics. And it is true that AI is the talk of the hour, because it has been, with evidences, noticed that its role in reducing the false positives. And in some of the cases, it was reduced to more than 70%. Financial institutions usually face the challenge in knowing how to classify their customers. And I myself, I noticed this challenge during the sessions and discussions with the banks, starting any implementation for AML, an automated solution. So they have this challenge in knowing how to classify their customers. And here comes the AI to provide them with efficient techniques in clustering their customers, and not only based on their type or their geographical information. This is not enough anymore, but also based on their historical behavior and hundreds of criteria linking each cluster to a proper scenario. And this supports what was mentioned by Jeremy and clearly stated in the latest guidance note from the Maltese FIU, that one size fits all model is no longer efficient, and it doesn't help in proper monitoring. And also it was highlighted in the guidance that you don't need to know only your customers, but you also need to know the counterparties with which your customers are dealing with. And with the AI network monitoring models, the FIs, they can detect suspected and suspicious networks and visualize them using link analysis tools, providing high transparency, high explainability, and presenting AI as it's not a black box anymore.
Thank you, that's very helpful. And I think you're right in terms of AI, machine learning, it's definitely the talk of the moment. So
yes.
Very surprising to not hear the term AI come up in webinars and conferences these days. So perhaps could you maybe give us a bit of insight as to how the industry is approaching AI? How's it reacting to it? Where does it see fitting in? And is there any sort of hesitancy or nervousness around the usage of AI when it comes to AI and AML and compliance monitoring tools?
Yes, there might be some kind of hesitancy, yeah, because usually financial institutions, they like to go with the conventional methods of monitoring the transactions. But with the challenges that have been already mentioned, there is no way that we will stay going with the conventional transaction monitoring. The efficiency, the operational work will no longer be efficient without having the AI. The AI can provide them, as I said, with techniques to risk rate their accounts and customers, and not only based on residency, nationality, and these traditional risk factors, but also based on their connections and relationships with counterparties, with their remittances to high-risk countries. And this risk will be dynamically changing based on these relationships and connections. Also, the AI plays a great role in streamlining the investigation by giving some recommendations for the investigators on how to close the alert, whether it is real detection or false positive. And this model is built on learning from the historical transactions and even on the investigator involvement. So we can say for this investigator, he's been always checking such cases or scenarios, and it's been closed for this segment of customers in this way. Segmentation, I believe, it's the starting point for any involvement of the AI in the transaction monitoring solution, in detecting any behavior drift in the customer's transaction, and checking anomalies not only in post-fact, but also in a real-time way.
Thank you, thanks. And maybe, Manfred, if I just ask you to give an industry representation here of this topic of AI and machine learning and usage of more advanced technology in transaction monitoring systems. What's your feeling then in the industry of how people are adopting these options and where they see the future here?
So I think it's not the same across the board. So you've got the more adventurous entities that will, latch on to the developments in technology immediately and try to implement them and embed them into their systems as soon as they could see, the advantage in terms of efficiency and cost reduction and effectiveness. And there are others who are more apprehensive and more cautious. And I think that neither of the two are wrong in actual fact, because if you look at machine learning and the way it's evolving, ultimately I think it does give a certain level of efficiency. But the difficulty I think with implementing it, so quickly, is that first of all there is an element of explaining to the regulator what it is exactly that you have been looking at, and so having an audit trail. And not all AI solutions can give you that audit trail, because once the machine has learned to do something, it's not going to necessarily explain why one transaction was flagged and another one wasn't, and why one transaction was discounted and another one wasn't, and why the rules have evolved in a way that certain transactions are not even being looked at. So it's not just a question of adopting the first AI solution that comes your way. I think that there's a lot of scrutiny of what the technology does and how the rules are explained and documented that one needs to also examine. Also, I think there's an element of nothing can really replace the human intervention. So whilst AI is definitely the future, and AI is the present in certain instances, I would say, there will always be the need for the ultimate judgment being made by human intervention, at least from an angle for the foreseeable future. Because AI can facilitate, because of the large volume of transactions, the way the prioritization works, the triaging, etc. But it will not replace the ultimate decision that needs to be a human one, as to what needs a second look at, what needs possible disclosure to the financial intelligence unit of the jurisdiction, what needs further information from the customer, where you need supporting documentation, where the supporting documentation is enough. So AI will definitely help to narrow down the cases that require human intervention, but that human intervention will definitely not be replaced. And I mean, the larger multinational banks that are adopting AI solutions, and I know two of them, still continue to emphasize this point, that AI is going to facilitate things and going to ensure accuracy. And if you have a three-stage process, it can go down to two or possibly go down to one, but it will definitely need the backing of human intervention, possibly reducing number of people involved, but definitely not eliminating.
Thanks, Manfred. Just before I bring Jeremy in for a comment on the FIAU's opinions on AI, maybe if I just ask Rasha to elaborate a bit more on this point of, can AI be explained? Is it possible? Can this problem of financial institutions explaining how the AI tool is working, can it be solved for?
Yes, I totally agree with Manfred regarding the explainability challenge. Previously, when the AI was introduced into the transactions monitoring solutions, it was a bit of black box. So it will be challenging for the financial institution when they have a regulator or an auditor appointment from the FIU or from the central bank to explain what's the result, how the decision was taken. But it's not the case any longer. With the models we have been identifying recently, we can provide a high level of explainability why this decision was made, what are the risk factors, what is the risk of the account or of the customer that supports the decision recommendation. So, and with the visualization and link analysis tools, it added also another layer of explainability and justification of the decisions made by the AI. Even the segmentation tools, now you can see the different segments by the AI, and it is supported by high level of explainability, even in natural language, showing the rationality behind each of these segments. So it's not a black box anymore. Yeah.
Thank you. And Jeremy, then from the FIU's perspective, how are you as an institution reacting to the growth of AI and the usage of it in compliance and transaction monitoring tools?
Yes, sure. So the FIAU, first of all, it welcomes and encourages the use of AI and machine learning because, as Manfred and Rasha rightly pointed out, it will lead to greater efficiency. It will make the process more effective as well to a certain extent because the right transactions are being picked up in a quicker manner. But at the same time, we understand that it's an evolving space. It's still growing, so there needs to be sort of an additional layer of caution in this regard. And I think one of the points that we mentioned, we also mentioned this in relation to detection rules in our guidance note, but also applies to AI and machine learning systems, that they need to be tested and fine-tuned regularly. So to ensure that sort of the right transactions are being captured and sort of everything is tailored according to new and evolving customer data coming in. And as Manfred also rightly pointed out, at the end of the day, there will also always be an element of human intervention involved. We might arrive at the stage where the systems in place are so intelligent that they're able to capture all the right transactions that warrant scrutiny themselves. But at the end of the day, there always needs to be a person who's addressing and discounting the alerts. So the system might give its recommendations based on past data, on historic data, but at the end of the day, sort of nothing can replace what a human does. So we believe that there will always be an element of human intervention involved. And I think when it comes to explainability, I think it's obviously good to have an audit trail in place, good that the system is able to give its reasons or the explanations why, for example, a certain detection rule was tweaked or a particular threshold was increased or decreased. But I think it's also important that the stakeholders involved are also involved in the implementation of the system. So they have a good consultation with their technology partners, and they understand what system they're getting. They don't just get a system and then solely rely on it without questioning it further, but they're actually heavily involved in the implementation. They understand what the system is able to achieve, the sort of the customer segmentation methodology it applies, the detection rules it has in place, and ultimately it's involved also in the talks, in those discussions and talks when they're discussing the considerations behind the system. Because if stakeholders are involved in these conversations, then, you know, if the FIAU or any other regulator for that matter comes and does an investigate and a compliance examination on them, they will be able to explain sort of the rationale behind the parameters that they implemented. Because if the, you know, the parameters in place and the detection and the sort of methodology in place behind the system makes sense and, you know, is adequate, at the end of the day, that's what matters. Obviously, the system, you know, might evolve, might change certain or tweak certain rules over time, but at the end of the day, if you have a good foundation backing that, I think that's the most important thing when it comes to these new technologies.
Thank you, Jeremy. And I think it's very, very refreshing to hear, let's say, the FIAU's open-mindedness on this topic, and that it is very much embracing it as a future solution that's certainly here to stay by the sounds of it. And just as we sort of get towards the end of this session, we have had a question on this topic, which I think we've now quite nicely covered with these last 2 points around making sure that AI, if it's being adopted and used, can have explainability and transparency as to how the technology is working. That seems to be the key we've highlighted here. As a quick reminder to any of the participants, if you wish to raise any questions, you will have the ability to do so on the interactive tool you have in front of you to post a question if you wish to do so. So we'll leave a little bit of time at the end to pick up any questions from participants. But with that in mind, as we give people a few minutes to think of some interesting questions for the panelists, maybe if I could just ask for some closing thoughts or some takeaways for the audience, and particularly around what you feel participants should be focusing on then primarily with regards to this guidance note, both in the near term as well as the long term, so the adoption of AI and technology in the long term, but also for here and now, where they should be focusing on. And perhaps if I bring Manfred in first for your views on this.
No, and I think that one of the areas that most institutions would be grappling with at the moment is the speed at which they want to deliver a customer service, right? If you look at banks and financial institutions, there's on the horizon, you know, SEPA instant credit transfers. So the ever increasing need for instant transactions. If we look at other areas, we mentioned gaming earlier on, you know, the need to provide the service there and then, the need to pay out funds to customers, to players in the case of casinos and gaming operators. You know, everything is instant. So that is why the pre-transaction monitoring aspect is the trickiest part of the transaction monitoring obligation. Possibly that's why we're discussing this part of the guidance notes today. So ultimately, you have two conflicting norms coming in from different. So there's the business side, but also legal requirements. So instant payments, particularly on one side, and the push by the EU for instant payments to happen. And we speak about 10 seconds here, right? And then on the other side, you have rules saying, no, you need to stop, you need to, through segmentation and everything, but you need to examine the transaction. When you have large volumes of transactions, how are you going to manage this? So what institutions, I think, need to focus on is the ability to balance the two. So there's the customer experience and now the push even from regulatory norms to provide the service as instantly as possible. And at the same time, you know, comply with your AML obligations and protect your institutions. So make sure that these transactions that are being processed so quickly and so instantly do not expose to your organization to heightened risk. And that is, I believe, a very difficult balance to attain, but it's a necessary balance that needs to be attained because these rules are here to stay. Even though we aspire to have more clarity as to what is a legal norm and what is just a good practice, and what is evolving from a good practice into a legal norm that could give rise to an administrative penalty. So there we have this evolving situation. So it becomes even more pertinent that this balance is achieved. And I think that is one of the biggest struggles every institution will be facing.
Thanks, Manfred. If I can ask Rasha to maybe reflect on some of those points as well in your final thoughts, particularly around the instant payments challenge that banks and financial institutions are facing as well. We have, I think, a related question that's popped up on the tools and technology that also exists for screening pre-transactions monitoring. So perhaps in your thoughts, are there any solutions for the here and now as well that banks and financial institutions can be adopting to help in this area?
Yeah, thank you, Alex. Yes, talking about real-time transactions monitoring, as Jeremy said, most of the people, they think that they only need to screen the names and the countries and the remittances and the wire transfers, and this is not correct. We have different perspectives in real-time transactions monitoring, in AML, in sanction screening, in fraud, in trade-based money laundering. And for AML, real-time transactions monitoring, I also agree with Jeremy that we should define real-time scenarios for clear-cut cases, because you cannot have an army to stay ready to monitor every single transaction from AML perspective. So you need to know, you need to define real-cut cases and rules to monitor transactions to check the diversion of the client's expected behavior from his expected or known behavior, or from the financial institution business model. And in all cases, the real-time AML, it will reduce the cost and the time for the post-fact transactions monitoring. As for the sanctions screening, it's not only screening the transactions in real time, but we also have the challenge, as per the EBA Crypto Technologies Working Group. They mentioned that one of the challenges, it's related to the sanctions list updates. It must, because usually it's being updated and reconciled by multiple parties, and this might lead to having some parties updating lists at different times, which will lead to information asymmetries. So crypto technologies like distributed ledgers, DLT, it can help you to get hourly based list updates instead of daily updates in a very secure way, immutable, with zero human intervention. And in this case, financial institution will no longer need to wait till the end of the day to get the list updates, but rather they can keep this institution safe against any newly added entry. And this goes back to the first point mentioned by Jeremy, that the fines and the penalties, they are putting a lot of pressure on the financial institution to manage the fines and to manage and also to protect their reputations. And as a conclusion from my side, in one of the recent webinars that I have attended, talking about the balance between innovation and regulation, they mentioned a note that I believe is very realistic. They said automation is amazing. However, human rationality cannot be automated. And since the financial crime prevention regulations, they are descriptive and not prescriptive in nature, we cannot remove the human element completely. And this also supports what Manfred has said. So we always need to balance between technology, innovation, and regulation. And from my point of view, I think financial institutions must soon prepare their compliance teams to handle real-time transaction processing and monitoring, or they would lose out on vast revenue. Thank you.
Thank you. Some very good suggestions there. And then Jeremy, in the last couple of minutes, any sort of closing thoughts from yourself? We've got a related question, so maybe we sort of build this in terms of not just in terms of the Maltese financial system, but also how the sort of international market or international regulation will also be important for banks to banks and financial institutions to be taking into account here. So any final thoughts and encouragement you have for the participants?
Yes, sure. So I think first of all, as Manfred mentioned before, it's all about striking a balance between the business needs and making sure that the AML requirements are being met. So we understand as the FIAU that obviously that AML is just one component that financial institutions have to adhere to. So we understand that there are certain challenges, but at the same time, the FIAU, and we are sure that other regulators worldwide, they're here to support. So this is the reason why, for example, we issued the guidance note, that we issue training sessions and so on, that obviously we're trying to bridge this gap between our subject persons, obliged entities, and the regulator, and sort of provide practical guidance on what should be done. Now, from a transaction monitoring perspective, I think it's also about striking a balance between pre and post transaction monitoring. As FIAU, as I mentioned before, we believe that both are necessary, and in a way, they both complement each other, because if you have a good post transaction monitoring system in place, you can then use the insights that you derive from analyzing the customer data to sort of build and refine a good set of detection rules, which are implemented at the pre-stage. And then once you have your pre-transaction monitoring system in place and well refined, then this will reduce the backlog of alerts that you get at the post stage. So it will sort of reduce the extent of monitoring that needs to be done at the post stage. So that's why we believe that striking a balance between the two is important. And then there's also the issue about AI and machine learning. We believe that, as I mentioned before, they can support transaction monitoring both at the pre and post stage, but obviously there needs to be an exercise, sort of a layer of caution taken here. Don't blindly rely on these systems, but subject persons can use them to support their day-to-day tasks and make the process more efficient. Ultimately, that's sort of, we believe, striking a right balance, as Rasha said, between the system and human intervention. Those are just some final points, really.
Thank you. I think that's a very good sort of closing point to finish the session on, and striking this balance, as you highlight, between not just human intervention, but use of technology, as well as looking at pre and post transaction monitoring as a balance as well. Clearly, I think the underlying message is there isn't one size fits all here, but certainly the room for improvements and areas for advancement opportunities are there. And I think the guidance has been very helpful, and a very helpful discussion from all the panelists. So if I could just say a quick thank you to all of those who participated, and thank you for raising the questions as well. We will, if you have any sort of follow-up questions, do feel free to reach out to us. We'll be happy to take any comments or feedback following the events. And thank you very much for all the panelists for taking part today. And we look forward to hosting a session again in the near future.
Thank you.
Thank you.
Thank you, everybody.
Thank you. Take care.